Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
And welcome to Markets Now. I'm Michelle. I work with Brad Kooima, Varilek, and we are seeing grains to the plus side this morning. Big rally in the soybeans, but livestock setting back, including cattle. Brad, I'm just going to rip the Band-Aid right off. Everybody wants to know the big reversals on Friday limit down moves and feeders. Is the top end in the cattle market?
You always ask such easy questions, right?
Did you want me to tee you up first as far as why we had the break and then ask you, or the other way around?
Right. Well, we could go with, we know that Brad doesn't know, right? So he's going to take a shot at it here. Thanks for having me on, of course, again. I'm dumb enough to give you an opinion. Could the market top? Yeah. The market's exceeded my expectations, and I was pretty bullish at the beginning of this thing, as you recall. I think it's exceeded most everyone's fundamental expectations, at least of where we could go to. Now, is there something that's much different fundamentally this morning than there was, say, Thursday morning? Well, no, there isn't any more cattle all of a sudden from out of the top, falling out of the sky. But I think you look at Friday's action, if we wanted to boil it down to that, okay. Anybody that cares about cattle at all knows that there was just another screw room story. This time it was supposed to be in Oklahoma. The whole story seemed contrived from the get-go. Even I understand some of the video about behind the story was exactly the same video that they used a couple of months ago when supposedly we had one in Missouri. So I don't believe that was the reason why the market broke on Friday. Now, if you do, then you're going like, well, why aren't we limit up? Because obviously that was just a rumor. So I think the market had some other stuff going on. And that is,
you and I started to talk about this last week, including kill cuts, right?
Absolutely.
And lower cash.
We finished the week limping in with fat cattle. I would call the South too lower at 235, at least too lower than where they were in the middle of the week. Not that that's such a bad price. There was a little bit of 245 here, but there was a lot of packers that pulled bids, 242, 41, 40. And of course, that's what they do when the market's lower like that. The futures market's lower. They're going to try to take advantage of it, right? I mean, their margins are very poor. And speaking of packer margins, everybody kind of lining up with another major packer this morning talking about going to 32 hours. They're not the only ones. Look at that kill last week. Look at the kill last Friday. So that should help support the boxes, but does it back up cattle? Probably. I think that the available supply is a little bigger than that last week's kill was. So all of that's in play here. And you can see how fragile, a little bit of screwworm type news is. And now what about the border? That's kind of whispering in the corners here whether they're going to reopen that. I don't think they will anytime soon, but I've been surprised. General economic situation is still part of the market too here. So up here, these are unbelievable prices, guys. And I've said it a million times on your show and others. If it's okay if you want to stay friendly, but buy some put options. From these levels, things can change very, very, very quickly.
Right. We do have an announcement from USDA coming on New World Screwworm on, I think, Friday. As you said, though, you don't expect that to be, hey, we're going to reopen the border type of an announcement.
I'm guessing, but I doubt it. I would guess that it's going to be more of, a reiteration of what all the protocol, what an awesome job they're doing to make sure that we never get it, some of those assurances type things. I would be surprised, after they tried to open it and then we had this rapid movement, got within 370 miles or something like that. But again, I would not think that that's the way they would do it, but they're unpredictable.
Right. So let's talk about technically, where do we need to hold here, Brad, for the funds not to liquidate? Because they're still, as of last Tuesday's commitment of traders report, still very long in this market.
100%. And I think that from a technical standpoint is the question. Today's low, interestingly, is the 20-day moving average. Okay. That is one of the first spots that you'll watch. So I think through today's lows, you'll get a little bit of selling from some of those quick moving funds. But I believe that 222 is kind of a benchmark for a lot of the long trend, the slower turning funds, I guess. So there's two things about that 222. I'm talking about October live cattle, where all the open interest is. That's probably where the funds would defend it, if they do. There is some questioning here after this big of a trend. Will they continue to do that, or will they start to take money? So I'm going to say today's lows is a significant, but the huge number is going to be 222 or thereabouts for October cattle.
What about the feeders? What are you watching there technically? And I guess we should have pointed out, we're under expanded limits here today after the limit down move in feeders on Friday.
On fats and feeders both, because one of the components, like we need to have bigger limits than we had already on Friday. What a joke, huh?
Yeah, I do not want to get you started on that whole thing, because we need another half hour to talk about that.
You said that exactly right. Yeah. We had Mad Cow when we got by with 5 days. We were trading again, right? But I don't know. It plays into the hand of the algos. I would say, let's go with September feeders. That's the front month. To your question, 333. Staring at my charts here too. 333.70-ish. Maybe up to 334. Did you notice how we fixed that whole basis thing in all of about, felt between Friday's action and today's up in the index? Looks like the index is going to be up. The feeder index is going to be up like $3-ish. And then with the collapse in the futures on Friday, otherwise those futures were way too high compared to the index, especially in August when you only got a couple of weeks left in August. So some of that is a basis adjustment, I guess, as well.
So, Brad, you mentioned the lower cash trade that we saw on Friday. Does the break in the board give the Packers any leverage this week to push it down again, or where do you think we'll sort out there?
Well, it certainly does. I mean, it gives, I don't know if leverage is the right word, but I mean, you dampen the psychology of the feedlot, right? I mean, you go like, well, if it's too lower, last week, what if it's too lower this week and too lower? I mean, that gets to be a mindset kind of a thing. And hey, cash market going down in August, you think that's never happened before? I mean, the seasonals here are one-sidedly, that's what the expectation would be. The weights are going to come up. We're going to have a few more cattle. These calves get fat, blah, blah, blah. The demand is not exactly, record book stuff in August, of course, so, all that's been in play for a while, but now that the market's, feeling a little bit weaker, maybe, now we're talking about it again, but it's real. I guess my sense would be that if you get futures on top of cash here in the South, we're not very far from it. We're at 233.25 on August cattle right now. That changes some of the dynamic of the delivery potential, stuff like that too, and that plays into a futures trader's head as well.
Right. So I mentioned Hogs actually opening lower this morning, and now we're trying to fight back in these nearby contracts. But what do you think is the main driver for that market right now? Because fundamentally, things have held together pretty well, but we can't get above technical resistance, it seems.
Well said. I think the hog thing, the macro for the hog thing to me is that even though right now production's feels a little bit tighter, at least to us, because of the difficulty to source pigs for a while already because of some disease issues, and those are always regional, but they seem to be kind of real right here, right now, that there's a little bit of a tightening of supply. But the macro to the market to me still is when you're producing this much every day, you got to have perfect demand, otherwise you're going to have trouble. And I don't know if you can really predict perfect demand given trade uncertainty. Both, hopefully Mexico's immune from anything. China out there, that's a big deal. Is their production back on their feet enough that they don't need to import a lot of pork, or is this strictly a trade disagreement that they're not doing that? So, some of that uncertainty on the demand side, I think, keeps the hog thing in check. To me, though, I mean, the back end of this hog thing is so discounted that
my gosh, yes.
How do you be bearish $83 these hogs? I can't get there. I think they've got plenty of a discount built in there. So hopefully we can surprise them and we can turn into a little better demand than what they're predicting.
Yeah, that's the good point that you make there about those huge discounts back there. All right, we're rallying in the grains this morning, led by a gap higher opening in soybeans after President Trump tweeted that China needs our soybeans. They should buy quadruple of what they're purchasing, which right now is nothing. So is there a trade deal in the works here, or what?
Well, I'm all for you grain guys, right? And I'm a grain farmer a little bit myself, to get around. So don't get mad at me when I, kind of dampen this whole story. Yeah. Like one of our guys this morning here said, well, what is 4 times 0? I guess that's still 0, right? If we
That's what I said. They're not buying anything. So 4 times what?
yeah. Yeah, a lot of rhetoric. That's the first we've heard out of Washington, of course. It won't be the last. I have a hard time believing that story gives us enough legs to sustain the rally, particularly when I think the perception out there is that we've got a big crop. And until we know exactly what that looks like, how big it is, then we can start to sort out what we ought to have for demand against that kind of a deal. So much as I'd love to give you a great reason why we can fly up out of here and make an early low, seasonal low, I seriously doubt it. Today's high is just in the neighborhood, not quite of halfway back of the last leg down. So honestly, I hate to be Debbie Downer here, but as a trader, I'd probably rather sell this thing than buy it. No probably about it. That's how I would feel about it. But with some proof that the fundamentals here, that we got a big crop, and we'll see once whether just talking about a trade deal gets one done. I'll believe it when I see it.
I'm with you on that. All right. Thanks so much, Brad Kooima with Kooima Varilek. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.